G'day guys, welcome back to Pete's Investing. Today is October 2nd, 2023, start of the new month for trading. So I've got here the US S&P 500 on the daily chart. Now, we did have a support level here at 42.98, and that was just shy of the 61% level, which we always look out for. Now, since our last update, it's actually fallen further. So I'm going to move that support line to that end of that wick. And that you can see there now it's broken below the 61%, and that's always a key area to look out for. The price has bounced off that, but we're most likely going to see further declines if it breaks through this support, and that'll be very dangerous for a pretty major decline on the S&P. If I restore that, you can see here the CCI, the Commodity Channel Index, that's still in a pretty strong decline, and it's fallen past the zero mark. So it's gone from the overbought and now falling through the zero mark, which is the midpoint, and approaching towards the oversold territory, which we're not there yet. So we're possibly going to see further declines in the near term, in the coming days or possibly weeks. Also, you can see there the Stochastic has broken through its moving average from the overbought, and it's also falling off quite substantially, and it's approaching the midpoint in that area as well. Now, if we look at the before I move off the daily, you can see there we've drawn a Fibonacci from that low point to that high, and that's where that 61% is. If it breaks much lower than that, especially if it breaks through the 100% level, then we're going to lower that Fibonacci and measure it from that bigger point. But I like to take these things one step at a time. Let's not get ahead of ourselves. But obviously, if it falls much further below this major support here at 38.08, that's what we're looking out for. So we're, again, as I said, let's keep an eye on it and see how it goes in the coming days and weeks if it falls much below this minor support. On the hourly, you can see there since our last update, let me just get rid of that. We did draw this Fibonacci retracement, and that was our previous video, and that's where it bounced off initially. Now, since then, the divergence, we've got a bullish divergence here on a CCI versus the price. You can see that divergence is extended down to that new low, and the CCI kept rising, so this is now a new divergence to be measured. Now, you wouldn't have entered that initial divergence because it didn't break above that moving average from that previous point. So what we're going to do now is look at, once you would have entered there, our initial target would have been, again, I always choose the closest Fibonacci range. It would have been between that 23% to the 38%. Now it's already hit that area, so consider that retracement divergence hit target. So we'll extend that a bit higher and see if it reaches the 50%. It may go a bit higher, or possibly even collapse from there and actually break through this support. As I said, you can see there the CCI is still rising, so that's a positive in the short term on the hourly. And you can see here also on the Stochastic, that's also rising from the oversold, approaching the 30 mark and approaching the midpoint. So I'll keep an eye on it, let you know how it goes, but it's already effectively hit that initial divergence on that CCI bullishness, and we're not sure how far it's going to go, but we'll keep an eye on it and see how far. I usually pick the closest Fibonacci range for a target area. So again, just feel free to subscribe to the channel, hit the like button, and see you in a future video.